purchases, and a cash
Hello,
payments
and welcome
journal
to my screencast for
where you
Accounting
record
1110,
all cash
Chapter
paid out,
1.
and then the famous general
In Chapter
journal
1,
where you put anything
we have a tough
that doesn't
concept
fit in the other
that
4
we
journals.
need to master.
If you
It's
think
easy
about
enough
it,
to
you
learn
can only
when we're in
denominate
Chapter 1, but
transactions
somehow,
in
when
cash
we
or
move forward
credit
into
in our
Chapter
economy,
2 and 3,
and these
the
4
idea gets
journals
convoluted.
accommodate that.
So
The
I want to
sales
spend a little
journal
extra
is
time
for
on it right
credit
now
sales,
and make sure that with each chapter, we're keeping this idea straight in our mind.
and nothing else.
You learn the
cash
idea
receipts
of the
journal
basic
is
accounting
for all
equation in
cash
Chapter 1.
received,
And that idea
regardless
is that
of
when
the
you record
source,
transactions, they always leave the basic
including
accounting
cash
equation
sales,
intact.
credit sales and
The
sales
basic
journal,
accounting
cash
equation
sales
is
and all other cash receipts,
assets,
and cash
which are
journal.
things that we own,
You can buy
equal
things, you can purchase things on
liabilities,
credit, so all
which
things
are things
purchased
that
on
we
credit
owe,
belong in
plus
the purchases
owner's
journal.
equity.
And
Owner's
all money
equity
spent,
is a
all
residual
cash
interest,
paid,
and it would equal assets
goes into
minus
the cash
liabilities, and it's essentially
payments journal. And
how much of an
anything
interest the
else
owner
that
has
doesn't fit,
on the assets
like
of the
adjusting
business.
entries,
In Chapter
closing entries,
1, we expanded this
a
basic
few other
accounting
items we'll
equation
discuss
in the
later
area
can all be
of
put
owner's
in the
equity.
general journal.
And
Things
the
that are put
expanded
in the
accounting
special
equation
journals are posted by posting the
kept
column
assets
totals,
intact and
which
liabilities
must have a
intact,
debit equal
but it
credit
broke owner's
situation in
equity
there,
out
so it
into
worked.
the 4 accounts
And then the
that
general
make it
journal is
up.
posted, as it has
There
always
is
been,
owner's
in an
capital,
account at a time.
Owners, which increase.
So the flow is
Owner's
you
equity,
journalize
owner's
into the
drawings,
special
which
journals
decrease the
all
total of
month
owner's
long
equity,
in
revenues, which
chronological
increase
order,
the total of
and at
owner's
the end
equity,
of the month
and
you total the
expenses,
special
which
journals
decrease the
and
owner's
post
equity.
just the
So,
totals
owner's
into the
equity
general ledger.
has 4 different
And if your
types
debits equal
of
to
accounts
credits in
that
each
live within
journal, then when you
When an
post,
owner
your debits
makes an
will equal your
investment
credits,
in the
so when it
business,
comes time to pull off an adjusted
that
trial,
is
an
recorded into
unadjusted
the
trial
capital
balance,
account,
things will
and
work
it
out
makes
just fine,
owner's
and it
equity
too will
bigger.
balance.
When the owner
That is
withdraws assets from the
shortcut then
business for
offered by
personal
special
use,
journals. The next
that is
thing
recorded
I'd
into
like
the
to
owner's
do
drawings account,
is to
that makes
practice
owner's equity
with an
smaller.
exercise to be sure that you learn
When
how to sort
The business
transactions into the appropriate
generates
journal.
revenue
So we'll stop with our discussion
that
on
increases
special journals
owner's equity.
right there.
Let's say
and
we're
go
an
to
accounting
practicing
firm
them.
and we perform services for someone and are paid. We would increase cash, an asset, and we would increase revenues. Revenues is a component of owner's equity, and when you have revenues, it makes owner's equity bigger. Any expenses we incurred in generating those revenues would be recorded into expense accounts. Expenses make total owner's equity smaller. So, owner's equity has 4 different types of transactions that affect it. 2, which have the nature of making it bigger, investments and revenues, and 2, which have the nature of making it smaller. As the draws and expense accounts get bigger, they make owner's equity smaller because they decrease it. So when you're working with the basic accounting equation, it's important to remember it has 4 different types of accounts that are included within it, and the sum of the 4 of those accounts, 2 of which increase and 2 of which decrease, are shown in the basic accounting equation as the total of owner's equity. Remember that as we move into Chapter 2, and things will get easier. I'll continue to draw your attention and come back to this idea as we progress. Looking forward to moving on to Chapter 2 with you. Talk to you soon. Bye now.